All righty.
Okay. You tell me when. Okay. I have.
Feeling good with the data and the good stuff? Heck yeah.
Yep.
All right.
Okay. You ready?
Yep.
Okay. Here we go. I'll point to you when you go.
Hey, folks, welcome back to your Frederick Real Estate Update. I am Darren Ahern with RE/MAX Results, bringing you over 23 years experience in the Maryland, PA, all over the country, and now the world region to be able to help you with your real estate goals and needs. So, and I have with me next to me here, the man, the myth, the legend on this beautiful July 11th day, Mr.
Terry Kernan.
Here we go.
Let's go.
We're halfway through July.
It's unbelievable, but where does June go? And I always say, once we get past July 4th, it's almost like the summer's over because the next 6 weeks is a blur, and then we're back to school and
it's just crazy.
Football and college football, and let's go.
That's it. But we got to wave the American flag. That was a big, big day. And sorry I wasn't able to be with you. And Terry's been busy doing some good stuff, but I had my little vacation. Got to hike in the highest part of the whole world that I've ever been, Terry. 15,000 feet up I hiked in the Andes Mountains with my Milagros, awesome woman. And so we did it. Took about 8 hours.
Did you really?
But it was pretty intense. I thought I was in pretty good shape until you get to 15,000 feet up and you start to realize this is not where we're designed to live and be. So it was pretty intense, awesome. I saw some of the lake and the most beautiful views I've ever seen besides Alaska and Colorado. It just blows that away. And it was a lot of fun. So
it was 4 hours up,
about that.
5, 6 up, and 2 down. What was it? It was just
it's crazy.
8 hours.
Yeah, it was all day long. The whole trip, all day long hiking, and I'll tell you what. As soon as the tour guide, then people see me and they go, "Man, you look to be about in your late 40s, early 50s. You sure you don't want to take a caballos up, which is a horse?" Because that's what a lot of people do if they're not physically fit enough or whatever. But I said, heck no. But all those 25 and 30-year-olds blowing past us, man, that was humbling.
That's incredible.
But it was amazing.
Feet up.
Yeah, so I'll show you pictures. Got to be right up snow-capped mountains in the Andes Mountains. It was unbelievable. So I was looking for real estate. I'm like, what's for sale out here? What's the market like out here? So Terry, let's jump right on into it. And that's what everybody is wanting to know is what in the world, is going on in the real estate market. I've been listening to some good podcasts, flying on back 9 hours out of Peru. And I'll tell you, the information that's out there is just all over the map. And I'm going to read a couple things, something from realtor.com that's really good, and a little bit of a report. But this is your weekly dose of real estate news and updates. We're going to talk a little bit now about Frederick stuff and then mortgage stuff and what's happening. This is weird. It's a phenomenon right now. Last year, Terry, we were at like 475 homes for sale. We saw it climb. And then it decreases a little bit in the fall, and then it starts picking up. This whole year, we had got up to the high of 2 weeks ago, 701 homes for sale. Now, here's what's crazy. Today, this week, right now, we're at 695 homes for sale, 698 last week. This is not what we were predicting. We've been predicting that so here's what's going on. Two big factors. We're totally flat with inventory now. 3 weeks now in a row, we literally are within 6 homes. That's never happened. I've never seen that be like this. Mm-hmm. Especially the trajectory that we've been predicting is that we would get to like 750, maybe 800 homes. And the thing that caused them to go up are 2 factors. Number one, we are seeing less and less sellers willing to sell their home, not just here in Frederick. Nationally, it's the lowest it's been in 6 years.
So when you say willing to sell their home, meaning willing to put it on the market or willing to negotiate?
No, willing, great question. Willing to put it on the market. Even sellers that are just like sticking their fields. I don't have to sell. If I'm going to sell, I want $1 million. I ain't budging from my price. I'm gonna, and if it doesn't sell, I'll be the rage delister and I'll take it off the market and we'll try again next year. And so that derage listing thing was a really big thing last year. This year, it's not. Not even 50% of all sellers that took their home off the market that did not get their home sold previous to this time frame has not put their home back into the market.
Okay.
What are they holding out for? I don't know. It all depends on what's their situation, what's going on. The second big thing becomes demand, buyer demand. But so the good part is this spring market has not really been like a dud like last year. Remember last year?
Mm-hmm.
It was like a dud. This year it was a little bit better. This summer market has been a little bit better. The biggest thing we encountered right now was the delay with the war. 5 weeks, everything felt completely delayed. And then all of a sudden things were pretty good. And then it died off a little bit. And now just recently, it seems to be picking back up again. I mean, Terry, I had 6 settlements in June. I've got 5 for July. Last year was not even, it was half that. So for my business and other colleagues I'm talking to, we're seeing no doubt things are better than they were last year, but it's not, here's the weird anomaly. It's not normal though. Like all the indicators and factors and numbers and everything are not normal. So inventory is completely flat. Homes coming into the market is the lowest it's come down. Buyer demand has come up. And so where do you think prices have gone? Well, prices are up almost 3%. If we continue on the pace we're seeing.
Is that 3% from January 1 to now?
Till today, year to date, year over date, we're up about 2.9%. We could potentially be up 5% in values this year if none of these numbers go array. Now, as you and I both know, anything can happen out there and it can happen quick. But with real estate, it does take about 3 months to see the changes. The other big factor, I throw the ball in your court, is we've seen interest rates flat as well, like inventory. We're talking 6.5 and it hasn't changed. So what are your thoughts on some of this craziness?
So let's talk about what we're seeing is we saw a very, very good June. One of our best months in a long time for our branch.
And that's that demand going up.
That's the demand going up. Then I saw demand go down during, the last week in June, first week in July. It's basically been down, starting to get more and more calls. A couple things that we're seeing. One is the people that aren't selling their houses, they're renovating them. They're putting an addition on in a lot of cases. I've talked to people and they say, well, I have 2.5%. I don't want to touch that, but I do want to upgrade my house. So what do I do? Well, we're going to get you a home equity loan. I've done more home equity lines of credit HELOCs this year than I have done last year. Okay. So I've already outpaced myself for HELOCs. A lot of it is, sadly to say, I'm trying to get my finances straight. I've got $40,000 in credit card debt.
I was going to say, how much is this as debt?
Over half of the HELOCs I'm doing are debt.
Oof.
And then the other, let's say 40% are renovations. Just did a $200,000 HELOC for a renovation. Doing another $250 for a renovation. Doing a HELOC for somebody that, interestingly enough, they were buying a second home at the beach, but they needed to sell another home and they couldn't sell it. So I got them so they borrowed from their 401k. And, if you take it out of your 401k, you have like 60 days to put it back.
Yep, without penalties.
So we took the money out of the 401k. They bought the house.
Okay.
And now I'm getting them a HELOC on their primary residence to cover that money. So the HELOCs are, a lot of different uses, college education, but it's sad when I'm seeing over 50% of the HELOCs I've done is for debt consolidation.
Yeah.
And that's what scares me. Terry, I don't want to touch my 3% interest rate. I don't want to touch the 2.5% interest rate. I don't blame you, but you got to get this under control with the credit cards.
Yeah, okay? Well, it's cheaper to do a HELOC loan at what rate? 7 or 8% versus a credit card at 25.
Correct. 6.75%. You're looking at interest only. You're not looking at having to pay that down. So you're looking at easily, based on the 22, 24%, when you've got somebody that's paying carry costs of over $1,000 a month on a $40,000 credit card balance, that's unbelievable.
Yeah.
That's not sustainable for most people.
No, not at all.
And it's becoming it's becoming the snowball effect. It's getting bigger and bigger and bigger. So that's what I'm seeing with the HELOCs. Also seeing some demand going up. Got some first-time home buyers. But the question is always, how can we get this done? What can we do to get into a house? Do we really need 20%? I'm going to go back to the thing that I've always said on the show. Don't always believe what you think.
Yeah.
If you're a first-time home buyer, there's money out there. We can get the money taken care of. In a lot of cases, the Maryland Mortgage Program is a great opportunity to help buy a home. You also have Frederick County. You have Hagerstown City. You've got a lot of grant programs out there. Our grant has run out of money. We're hoping we'll see something towards the late summer, early fall to kind of replenish a little bit.
And that's normally been what, like $7,500?
No.
Or 45?
No, 17,500.
Oh, sorry. This is the I'm thinking of something little in a package. This is the $17,500 grant.
Yeah, and that's the one that you don't have to pay back. So
wow.
So when that comes in, that's
let us know.
Well, yeah, I do. And people,
I know you do.
People hem and haw, and it's like,
where'd it go?
It's gone. You gotta be
ready.
Game on. You gotta be ready. You can't analyze and figure things out. You gotta be ready to push the button.
Yeah, man. Okay? Yeah. Wow, good stuff. I know it's wild. It's really a wild ride, but yeah, Terry, when you talk HELOC loans as a real estate agent, the very first thing I think about is that's a junior lien, that's a second mortgage. And when I go list properties, and I just had like 3 more this week, do you have is your house paid off? No. Do you have a first? Yes. Do you have a second? What's a second? A HELOC loan. Do you have a third? Do you have a fourth? Do you have liens against you? Terry, we've been finding, thank God for Brand and all them at Community Title, liens and mechanic liens and things on these properties that people, they forgot. They forget, I didn't know I had to pay that back. That was from 5 years ago. No, that's going to come out of your proceeds. So my point is this. They think they're selling a house at $600,000. I owe $300,000. I pay your commission, closing costs, blah, blah, blah. I walk out with what? $260,000. Not so fast. Then all of a sudden they have realized they got, that's 70. I have one this week, mine, $70,000 HELOC loan. All right, no problem. So now the thing we encounter, Terry, is sellers are mad. They're mad, not at themselves for doing this or forgetting. They're mad that, oh man, I was only going to sell my house if I was going to make this much so I could go do this and buy a Ferrari. Now I can't do it because you're telling me I have to pay back something from before? Yeah. And I've had people, Terry, actually say to me, I read that I can take a second HELOC loan. It doesn't have to get paid back when I sell my house. I can just attach it to my next house I buy.
False.
I know. I'm like, who told you this? Because if it was not Gronk chat, or who told you this? Have you ever heard of that before?
So here's what I have heard. And this was somebody that did something that they thought was logical and they thought was able to get away with, is they had a home equity loan that they had no balance on. And they were selling the house. So they were sellers.
Yeah.
Like you talked about. They had a HELOC, but fortunately they didn't have anything on it. The day of closing.
Oh, no.
The day of closing, they wrote like a $50,000 check and put it in their account thinking that it would transfer to the new.
Well, yeah, I'll take it with me.
Transfer to the new buyers.
Thinking it would go to the new buyers.
They were like,
now they got to pay my debt.
So when this all came about, like 3 days later, when they went to close the HELOC and there was a $50,000 balance, they said they did the numbers, and our borrower was like, wait a minute, there's a problem. And we were like, no, there's not a problem, because what they did was something that's going to get them into a lot of trouble.
Yeah. Because
they had technically sold the house, but they hadn't told the bank that they had sold the house. You know where it's going.
Oh, yeah.
You know
that ain't good.
So they had to pay it back.
You got to pay it back.
I don't know if anything else happened to them.
Come back to
home plate. I didn't know the sellers, but I was like, yeah, it kind of makes sense if you don't know anything about the repercussions. So
Woo, when you talk about bringing it back, that brought up bad memories when I used to play baseball and T-ball, and I hit the ball so good right down the third base line. Everything was great. I'm running. I'm going to second base, and they're whistling, saying, go back. And I said, why? I hit the ball perfect. They said, it was right outside the third base bag by 2 inches. You need to come on back. Don't try that again.
Bring it back.
Man, I was mad. All right, let's get into June 2026 monthly housing trends and reports and outlook of things. Here it is. Here's the summary. You ready? And then get your comments on it. June was largely a month of continuity of the economy being stable for the housing market, stable, flat. This is no small thing after a tumultuous spring that left us whiplashed over mortgage rates and bracing for the economic fallout of rising inflation and the war with Iran. This month, the shocks gave way to a settled, if unspectacular, backdrop of the mortgage rates hovering right around 6.5% all month long. Inflation was firmed up and largely expected to be the same, landed in the confirmation of rather than a surprise of the markets. Like all things, the labor market steadied out further, and the Fed held rates unanimously. And while the signaling more hawkish posture ahead, it is not necessarily a rosy picture, but it's one that looks more steady than we've seen in the last months and months. The housing data told the same story of continuity of every trend we've tracked through the spring carried into June. New listings, they were up a little bit, but now they're down, especially in the Northeast. Pending sales up for the 7th straight month. That's what I mean. We've had sales going up 7 straight months. Asking prices are down across most of the country, but not in our area in Frederick here. Due to the sellers being realistic rather than the distress, it was a no news, good news June. While it may seem obvious now, this was far from the foregone conclusion just a few months ago. We spent the spring bracing for another false start, a nothing burger, and then the second straight cruel summer, but that has not really been the case. That housing market has held resilient, and it was not inevitable in hindsight. So that's that outlook right there. Thoughts?
Who's giving you that outlook?
That's Realtor.com, boys and girls.
Realtor.com.
Realtor.com. Okay. So this is one of our big sources. Then it says asking prices fell again at a record pace. This is what's wild. Year over year across the country, down 2.5% as an average. But in our area, we're up almost over 2.2 in the area. So we always perform a little better. Okay. And it's because supply and demand and jobs and all those fun things like that. That is the steepest annual drop. Realtor.com has had the data since 2017 and is the 8th straight month of declines overall. List prices per square foot fell 2.1% and are declining in 33 of the top 50 metros. So when it talks about 33 of the top 50 metros, we're in one of the top 50 metros. We are not in one of those 33. We are in the other side of it, which is good. All right, the 26-month streak of homes taking longer to sell is now over. The median time of the market around the United States held in June at 53 days. Can anybody in the room tell me the average days on the market for Frederick County right now? Please raise your hand.
I would say around 48, so it's not too far.
No, you're too high, Terry. That's okay, though, brother.
I'm okay
you're
with
good.
that.
34 days.
Really?
We were at 51.
40s.
Yeah, we were in the high 40s for a good while. And then we were trickling. We got to 40, got below into the 30s. We are right now at 34 days. So people want to know, why are we at a 34-day market in Frederick County? Demand has come up a little bit. Prices have been flat or up just a tiny bit. There's a few places down a little bit, high-end stuff. I had a place at 809. We just got it under contract, Terry, last week at 790. You know why? You know why we got 790 and it's a good price? You know why? Because all their competing homes in Kellerton and around the area have finished basements at 790 and 800, and ours doesn't.
Okay.
That's a great deal, and the seller realized it. We shot a little high. And here's the thing. 2 times I've had this week, sellers say, yeah, but my neighbor a year and a half ago sold for $825. That was a year and a half ago. We've come down to those brackets. So the demand is down for that price range. It's in a consistent brand new community where they've got competition, where builders are offering up to $40,000 incentives and you're not. And here's the big one. You ready? Here's a big factor.
Mm-hmm.
You can't compete against brand new ones. Yours is all 5 years old. Who wants 5-year-old house and buy brand new and it's going to cost maybe $5 more? That's the biggest thing we were saying. And there's a fourth factor, but wait, there's more. $14,000 a year in taxes. Pinch me.
Wow.
$14,000. They can take the same house, go to Ballinger Creek down here, and pay $5,000 less in property taxes for the same house. What are you going to do? Oh, by the way, they're closer to commute too.
Okay.
They're not in the city. They're not north side of Frederick. So all those factors are really big things that I've been desperately trying to drill into sellers' heads. You have to think in reality. You have to think like a buyer. And you have to realize that buyers are not buying at the same pace because rates are not at 3% and they're falling over free money. And you have to remember, buyers are skittish. They are really paying attention to every little detail. And if one thing is wrong conditionally or they don't like the home inspection, they're walking away. And we are seeing that uptick little by little by little, only because inventory is up 21% since this time last year. They got more to choose from. Now, as we see inventory stay flat or come down, that tune is going to change because buyers are not going to have as much to choose from to be as picky about and all that kind of stuff.
So talking about inventory, you and I have talked that, over the last 2 years, 24 and 25, October of those years, we saw our highest inventory.
Yeah, we did.
And none of it was over 700, I don't believe. But with the trend that we're going, do you think that October still has a pretty good shot at being the highest inventory month?
The only way I can see inventory right now going up are a couple of different factors. Number one, if we see more job loss or more sellers no longer being able to withhold and wait and go, well, I don't have to sell. And that turns into, oh, I got to sell. Divorce, death, debt, financial struggles, job loss. There has to be more extenuating circumstances that are negative to a seller for them to have to sell. Either that's going to happen or interest rates are going to come down enough to where they say, oh, all right, I'll go ahead and sell my house. Rates came down. But you and I both know what's going to happen with all the buyers sitting on the side of the pool. They're all going to jump in at the same time too, which counterbalances that more inventory coming out.
Yeah. So let's talk about what's happened this last week. Trump declared the ceasefire over.
Yep.
Oil prices shot up, rates shot up, everything. Rates were feeling pretty good. The momentum was going in the right direction.
Yep.
And all of a sudden, boom, 3 days later, we're at almost 10-month highs on rates again.
Yep.
So I don't see rates coming down. I've said it on the show before. I think rates are going to, the war has to get figured out and has to get settled out.
Yeah.
And, let's kind of like be a little conscientious of what this whole war is about. I mean, we have our soldiers over there fighting, and it almost feels like they're pawns with this whole, ceasefire, no ceasefire. I couldn't imagine the stress and the anxiety that they have, but also their parents and stuff. So thanks for what you do, and it means a lot. But until the war is figured out, the rates are not going to come down in my.
Yeah, we know they're not.
I mean,
they're going to stay where they're at. And a lot of that, Terry, as you know, the war stuff backs into investors. And investors, if they're worried about losing money, they're switching into bond markets and shifting and changing and being in areas that are going to be a lot safer than riskier, right?
Yeah. And Kevin Warsh's first Fed meeting,
yep.
They released the minutes, and it turns out that there were a lot of the, the governors, the people that actually vote on the direction of the rates, there's a split between whether they should raise the rates, keep them the same. And even there were a couple that I think were talking about, well, let's take a look at lowering. So there's kind of like a family feud going on with the Fed. So we got to keep our eye on that, because if somehow they raise the rates, it's going to cause a lot of bad news in the market.
Yeah. So this ought to be interesting, Terry. Next time Fed meets, my prediction is they'll keep it flat. It feels like that's what they're going to do. They're going to just keep things holded and see how inflation plays out, how the war plays out, how this, that, and everything else, maybe plays out. So, all right, here's another big thing they say. 2 Americas, 4 years from peak prices. Since list prices peaked nationally in June of 2022, don't ever forget that date. The average house in the United States was $449,000 in June of 2022. That is the peak, boys and girls. You want to know what it is today? $420. So when they talk about a little bit of a dip down, that's what we're talking about. Frederick, we weren't part of all the United States stuff. We're in another world. Asking prices are down 7.3% in the West, 3.5% down in the South, down south where all my exes live in Texas. But we're up 10% in the Midwest. And get ready, boys and girls. We're up 12.6% in the Northeast. The Northeast is where the big bucks, no whammies are, we call it. Prices since 2022 peak have fallen in 28 of the top 50 metros. We are not one of those. And the true measure of how the fragmented housing market has become since the mortgage rates have climbed. So next big thing it says, question is, mortgage rates ended the spring higher than many had hoped for, with the new Fed chair signaling concerns about inflation. The rate relief is probably not forthcoming, like we've talked about. Thank you. We could have wrote this article. Can the housing market keep weathering the storm? Absolutely. It says so far so good, but keep in mind that weathering the storm is far from thriving, but we're holding. And the central concern was that of a volatility and higher mortgage rates that would freeze the activity at some point this year, and we have simply not seen that happen. The fear of this has yet to fully materialize. Mortgage rates have sat around 6.5 for the 6 straight weeks now after a roller coaster spring. We have seen them uptick a little bit recently. You're right, Terry. Underlying activity has hardly flinched, though, with new listings up 2.4%, pending sales increasing for 7 straight months, even though mortgage rates have stayed above expectations and are likely to remain elevated. The song has remained the same for the past few months. We've been singing the same dang song. It's flat. It's flat. It's flat. But we're going to be okay. There are buyers and sellers out there, boys and girls. That's the thing to know about. So, all right, we want to thank all of our awesome sponsors. You're going to hear their information coming up. Make sure you get in touch with Connie Phillips Insurance, who is amazing. Get in touch with Terry. He'll help you out with all your mortgage needs, and also Community Title Network, Brianne and her crew, and Mike and all them over there who are awesome, that are doing 4 settlements for me coming up. And I thank you guys. You are amazing. Take care. Happy buying and selling from your Frederick Real Estate Update on WFMD. Take care now.
Perfect. I was like 27.57.